Meet the Joneses. Yes, they have it all. Nice car, fancy ski boat, and a beautiful home. Now meet their neighbors. They have, well, an average car and, no boat, but they do live right next door. It sure is hard keeping up with the Joneses. However, along with that beautiful house, the Joneses have a nice little $300,000 mortgage, which they'll be paying on for the next 30 years. Their neighbors also have a $300,000 mortgage, but decided to switch their thinking and their mortgage to an equity line of credit. They're applying a secret financial strategy used by the wealthy. Without any increase to their income or reducing their expenses, they will now pay off their home in under 7 years. Better yet, they'll save $187,000 in interest. And with all that extra money, now it's the Joneses who won't be keeping up, as they watch their neighbors afford all kinds of things. A new car, new boat, plus have the financial freedom they've always dreamed of. College for the kids, extravagant family vacations, even a second home. Don't be the Joneses. Switch your thinking. Learn the secrets. Download the Tell All ebook today for free.
Okay, so at this point, you want to get rid of any distractions around you. And in fact, if you're watching this recording, you want to pause this video and you want to go get your loan docs if you are currently a homeowner. And you want to get rid of any sharp objects around you because you might want to do something after seeing the truth that the banks are not telling you. Okay, guys, so look, let's jump right into the information. So what you're looking at right now is a home amortization schedule calculator. Okay, I know that sounds like a big word, but this is how the bank figures how to get your wealth, how to get you to pay for one house while you're buying them a house in the same process. What do I mean? I believe that documentation beats conversation, so I'm going to illustrate that to you over the next few minutes because people lie, and sometimes people lie when the truth is due. But numbers never lie. And so, guys, what we're going to do in this scenario is we're going to say that this is someone that's making a purchase for a home. And because I live here in California, I'm going to go ahead and say that the house is $600,000, okay? And we're going to say that this person put down 3%. Normally, you'd have to put down 20, but we're going to say 3%. And we're going to use 3.5% as the interest rate. In fact, if I scroll down here, it'll give me an option to be able to take a look at some of the rates today for a 30-year mortgage. And we can find them anywhere from 2.7% being advertised, okay, all the way down to 3.1. And so I tell you what we're going to do is we're going to use 3%. How about that? We're going to use 3% interest rate for this loan. And it's going to be a 30-year fix, which is 360 months. And today is August the 11th, 2020. I'm going to hit calculate. And now we're going to get the facts. Okay, so here are the facts. You paid $600,000 for the house. You put down $18,000 of your after-tax dollars for the house. You got a 3% interest rate, 30-year term, or 360 months, starting today. And your monthly principal and interest payment is going to be $2,453.74 per month. Adding in your property taxes and insurance, total monthly payment $2,916. But we're going to use this number right here, all right? And I'm going to come down here to the bottom and kind of break this down for you. Okay, so you can see right here, this is after 30 years, you would have paid a total in principal minus your deposit of $582,000. Your total interest paid to the bank was $301,345. Do you realize that that is 50% of the initial purchase price of $600,000 for the house? So I want you to remember that, okay? You not only purchased yourself a house for $600,000, but you also in the process purchased the bank a house for $300,000. I know what you're thinking, Mark. Well, what's the solution to that, right? I mean, I don't want to have to pay $300,000 for a $600,000 loan, and I definitely don't want to be tied to a mortgage payment for 30 years of my life. And I'm going to tell you a solution here in a moment, or I'm going to suggest a solution here in a moment. So I want you to remember these numbers. The house was $600,000. You put down 18%. That made your principal balance on the house $582,000, right? 30-year fix, and again, don't forget the 3% interest rate, all right? And so your monthly payment without, now this is without the property taxes or insurance, your monthly payment is $2,453.74. That's going to become very important here in a moment. Now let's talk about the solution. So I want to share with you a company called Switch U. Okay, switch your mortgage, switch your mindset, switch yourself from buying the bank a home and free yourself from the bondage of that loan. I'm getting excited already. Okay, so let's jump down here and populate this calculator and let's see what the results would be. All right, so we know that the terms were 360 months, right? The principal balance, I'm going to jump back over here so you guys can see it. What was the principal balance? $582,000. So we're going to simply put in a principal balance of $582,000. Okay. The monthly payment. So I want to jump back over here. How much was the monthly payment? Remember, we're not going to use property taxes and insurance. $2,453.74. So I'm going to go ahead and round that up to $2,454. So we're going to populate that right here for the mortgage payment. $2,454 per month. Okay, your monthly income. This is the amount of money that's coming in from your job. And we're going to leave that at $8,000. And we're going to say that your monthly expenses are $3,000. And guys, we're going to change this percentage from 3% to 4.25%. Yes, I'm going to increase the interest rate and show you that you're going to save money even though the interest rate may be higher, okay? And we're going to say that there's an annual fee for this particular loan of $35 a year, okay? I'm going to hit calculate. So let me show you now what the chart looks like. And so down here at the bottom, you can see the red line. This is representing your current mortgage situation. And the blue line is representing what you could be doing right now if you decided to switch your mortgage and switch your mind. And so what I'm going to do is I'm going to hit view report. And this is where we're going to get the facts. And so here's what it says. At $8,000 per month in income, you will pay off your home in 151 months. So let me bring up my calculator because I never try to do math while recording without a calculator. So 151 months divided by 12 months in a year, that's paying off your house in 12.5 years. I'm going to share with you how you can cut that down. But would you rather pay your house off in 12 years or 30 years? Now here's the exciting part, okay? Remember, we use the same exact numbers. It says, let me see if I can blow this up, because let me make sure you guys can see this on the recording. Implementing the HELOC strategy will allow you to pay off your current mortgage balance of $582,000 in just 151 months, which is the equivalent of 12.5 years, instead of 360 months, which is 30 years. You will also save approximately, listen to this, $139,044 in interest payments. This does not require any increase in monthly income and assumes your monthly expenses will remain the same. So if your monthly expenses goes down, your interest savings go up. I hope you guys got that, okay? It includes any specific future cash draws and assumes no additional charges such as late fees. By simply leveraging the existing cash flow, you can pay off your mortgage faster. Wow. And so we have the same information inside of this calculator that we have inside of this calculator, except I use a higher interest rate. Opposed to 3%, I use, let's go back and look at it, guys. I want you to see this. I use 4.25%. And so what I'm going to do is I'm going to say, what if this was simply 1% higher? How about 4%? So let's hit calculate. Everything else remains the same. Let's go take a look. And so here's what it says now. This is going to blow your mind. Implementing the HELOC strategy will allow you to pay off your current mortgage balance of $582,000 in just 149 months instead of 360 months. Now this is going to save you approximately $151,118 in interest. Free money to the bank. Now guys, I've been a tax coach for over 29 years. I'm going to bring up my calculator because this number is actually not correct. Okay, I want to go back over here and I want to talk about the mortgage interest that you're going to pay. And here it is right here, 300. Let me bring back my calculator. Okay, your mortgage interest is going to be $301,345 over the course of 30 years. Here's what I can tell you. After 2017, 99% of homeowners are getting zero tax deductions for their mortgage interest. And so I'm going to assume that you're in a 25% tax bracket. So here's your real number. $301,345 plus 25% income taxes puts you at $376,681 in interest. Wow. And so guys, if you want to learn more about this information, it's absolutely free to get. I know it sounds too good to be true because unfortunately they have not taught the masses the secrets of the wealthy. Do you understand that wealthy people do not have mortgages? In fact, in Europe, they don't even understand this concept right here. They use this concept right here. How would you like the ability to position yourself to save hundreds of thousands of dollars in interest that does nothing to pay down the cost of your home? This is the penalty for not having the money in hand to buy the $600,000 house. How would you like to eliminate that? And how would you like to learn more about this information absolutely free? Well, if you said I would, I want you to go to the link below and request more information because we're changing lives. We're moving people from the plantation of being in bondage by mortgage interest that does nothing but rob them of their wealth. Guys, this is absolutely incredible and this is absolutely ridiculous. You know, I understand that you got to pay for things, but I don't understand 50% of the house at 3%. Guys, come on. In fact, I'm going to go ahead and change this to 2% just to see what it looks like. Because someone's going to say, well, you know, I've got a good mortgage interest. There's no such thing as a good mortgage interest when you're giving the bank almost $200,000 of your hard-earned money that you're paying taxes on. Remember that, guys, at 2%. We've got a better solution, and it's called Switch You. Switch your mindset, switch your mortgage, take back your life, and create financial freedom and wealth for your next generation. And with that being said, I'm going to put a link down below for you to get more information. It's absolutely free, but it's costly to remain where you are. Mark Pyers, home-based business tax coach and wealth coach, CEO and founder, along with my beautiful wife and business partner, educating the masses to freedom.